Let's start with the earnings picture. We had seen some of the pace of upgrades and expectations start to dwindle heading into this earnings report, but so far these companies have been surpassing expectations. What have the naysayers been getting wrong?
Well, that's exactly as you said. It's still early days, but so far we've seen quite a few, strong earnings results across a number of sectors. And I think we've just been underestimating how nimble a lot of these businesses have become, how adaptable these companies have become through 18 months of the pandemic. We know there are challenges with costs, with labor, with supply chains, but they seem to be improving and companies are adapting. So I think we're going to have a better than or much better than expected earnings season for the third quarter. We also had a lot of Delta worries through August that have been able to dissipate maybe again faster than expected throughout September. So the outlook is certainly improving as well. And I hope guidance will follow that.
So, Esty, then when we do hear about companies, Apple, for example, this week, we learned, of course, that because of the supply chain issues, they might have to cut some of their production, shares sell off a little bit. In those types of circumstances, Esty, because you are more optimistic on these markets, do you go in and buy the dip?
Generally speaking, buying the dip has been one of our strategies and has been a very successful strategies. It's been, a difficult maybe 6 weeks for investors. We have seen a bit of seesawing in markets, a bit of, being undecided whether these risks and challenges are going to be stronger than the positives. But again, expectations have adapted. Even if you think of the Apple production, the numbers that the street was expecting aren't that far from what Apple mentioned. So you see that it isn't maybe as bad as some thought it might be, or as it's been painted out to be. And so, yes, I think going forward, we still like the cyclicals. We think there's still more room there. We still think that having a bit of a barbell approach and a little of those tech and defensives will continue to work. So still buying the dip.
So you like the cyclicals, Esty. It reminds me of yesterday we spoke to Rob Arnott of Research Affiliates, who basically was saying, making his bull case for value, saying that the valuation spread between value and growth is at an extreme, more so than the dot-com bubble. And he was basically recommending just fill up your basket with value as much as you can at this moment. How bullish are you? I know you're into the cyclicals, but how far are you willing to go into that trade?
Maybe not that far, in the sense that I'm not sure we're going to close that valuation gap entirely, but there's certainly more room to catch up. We're seeing vaccination rates accelerate everywhere. We're seeing reopening improve. As I mentioned, some of these supply chain stories are starting to look like maybe the worst is behind us, and the next 6 months should gradually see some improvement. You're seeing steps being taken in that direction. So there definitely is room for cyclicals. Obviously, still in energy. With the winter coming and some of these shortages there. But as I said, a little bit of a barbell approach, and a lot of it is also a question of investor horizon.